Today I'm going to introduce my business presentation. The company I choose is KBC Group. I think that everybody knows that it's a bank, and today we will see how investable the company is and whether it's smart to invest in it. Table of contents. First of all, I will discuss some ratios as the quick ratio, the return on assets, and at least the debt ratio. Then we will look closer at the stock market, and at least I will share my opinion. First, I'm going to look if the company is liquid based on the quick ratio. This ratio shows us whether it can pay off its debts in the short term with its current assets. The perfect ratio is around 1, and in our case, you can see that in 2019 and 2020, the ratio fluctuates around 1, which will say that the company can pay their debts in the short terms. In 2021, you see that there is a very large decrease and that there is a ratio of 0.03%, which indicates that the company is unable to pay off its short-term debts, which could put them in financial troubles. The company is not so liquid, so based on this, I can say that it isn't smart to invest in the company. Next ratio I will discuss is the return on assets. It shows us how efficiently the company uses assets to generate profits. From this graph, I can deduce that there is a sharp decline. A return on investment of over 5% is generally considered good and over 20% excellent. I can say that the return on assets in 2019 and 2020 was good, but in 2021 was a return on assets 1.3%, which is very uncertain for investors because it means that the company's management isn't efficient at using its assets to generate profit. The last one is the debt ratio, and it measures a company's indebtedness. A good debt ratio is just under 1. How smaller the debt ratio, how more assets are funded by equity, which is healthier for the company. A higher debt ratio makes it much more difficult to borrow money because the banks are afraid that you may not be able to repay it. The higher the debt ratio, the greater a company's dependence on outside capital. You can see in this graph that the company has a very high debt ratio, and this high ratio shows us that the company has far more liabilities than assets. So I can say that the company doesn't score well in the terms of debt ratio. Now I will investigate the stock market of KBC Group. If you look at the graph from last year, you can see that it reaches its peak around January and a little later falls very hard. You can also see that the graph has its lowest point in Augustus, and today the stock market isn't doing very well and is still low. After all these ratios I discussed closer, I can conclude that it would not be smart to invest in the company because it left very bad numbers in 2021. I can also conclude from the stock market that it isn't smart to invest in it at this moment. If we look at the years 2019 and 2020, the company did do slightly better, and in those 2 years I found it more interesting to invest in it. Mostly, these are my sources, and thank you for listening.